Stocks stage a recovery after a weak open with almost two stocks gaining ground for every one declining. Metals and utilities lead the gains today while real estate and banks drag.
The Axis Bank stock slides after it reports significant dip in operating profits, a sharp decline in net interest margins and a lower share of low-cost deposits, though deposit growth remains healthy.
Subhash Chandra, in a letter to the finance minister, lays the blame for the Zee-Sony deal falling through at SEBI's doorstep. He questions the timing of the probe and the notice by the regulator.
Strong volume growth and margin expansion lift Pidilite, tower additions and lower doubtful debts boost Indus Tower, but a sharp deterioration in asset quality hurts Karnataka Bank.
Veteran banker KV Kamath says RBI's concerns on connected lending by the corporate houses can be addressed with technology. And he is also hopeful that the central bank will evaluate the banking licenses for corporates in the right context. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Poddar. As always, with me is my co-anchor Pavitra Parekh. So Pavitra, we have seen a lot of volatility today and now a strong recovery as if the market is really fueled at lunch hour. So let's take a look at Nifty 50 at this particular point. And the last about 15-20 minutes of trade, we've seen quite a bit of action. So at the moment, 86 points gain, 21,323 level. Remember, the swing has been up and down from the low point or the high point of about 300 points for Nifty 50 in the trading session today. Sensex 2 is gaining about 126 points at the moment. Bank Nifty has recovered quite a bit, still is down 0.4%, and that particular pocket of the market is definitely a laggard. Mid-cap index, that is the one which is really showing resilience with 0.9% gain at the moment. An advanced decline ratio has, because of the recovery and especially with the mid-cap universe support and the broader markets participating now in favor of the advances. So the key stocks on my radar at the moment which are really gaining are Hindalco, Dr. Reddy's, Power Grid. Also keep an eye out for big bank HDFC Bank, which has lost a lot of ground, about 14% in this particular month, but today trying to recover a small bit of it, Pavitra.
Oh, absolutely. So that is the HDFC Bank stock. But for the banks overall, it's quite divided, right? I mean, you have names like Axis, ICICI, which are sharply lower. But you have names like Nisha was mentioning, HDFC, but also SBI, some of the smaller banks. So take a look at South Indian Bank, IDBI Bank. All of these seeing big moves. I'm talking about 9 to 10% on these names. So keep your eye out on that. Today is also a day when the metal stocks are doing well. So names like Hindalco, JSW Steel, Tata Steel. I mean, that entire index is up quite well. And you have some of the CPSE names, the PSU stocks coming back quite well. So these are up on your screen as well. Yesterday, you know, when that entire mid-cap fall happened, you saw all of these railway stocks come crashing down. Once again, today, they are recovering that. Z is up as well, by the way. What's not doing well, weak earnings are not being forgiven at all by the street. So you have Karnataka Bank, which is lower, Man Industries lower, Saskin Tech lower. I'm naming a few, but anything that's seen weak earnings is definitely seeing quite a cut come through. So that is the shape of the market. We'll talk more about this. But let's kickstart the show now by throwing the spotlight on the banking sector, as well as the earnings performance so far in the third quarter. Abhishek is joining us with the Q3 report card for the private banks. Abhishek.
Well, let's begin with business momentum. Axis Bank showed robust deposit growth on a sequential basis. It was up more than 5% quarter-on-quarter and nearly double the growth rate of peers. ICICI Bank and Federal Bank had growth rate of 2.9% quarter-on-quarter in their deposits. HDFC Bank and Kotak Bank both had around 1.9% sequential growth in deposits. Coming on to the loan growth momentum, it has been healthy for all the banks. Private banks grew loans by more than 3% quarter-on-quarter. quarter. Highest loan growth was seen for HDFC Bank at about 4.9% growth sequentially, which was followed by Axis Bank and ICICI Bank, which were around 3.9% growth on a sequential performance. Kotak Bank had growth of just 3.25% quarter on quarter. Now look at the low cost deposit or CASA. At industry level, it is on a declining trend. So top loser in terms of quarter on quarter with respect to CASA ratio was Axis Bank. They built up their deposit portfolio with wholesale deposit. So Axis Bank CASA ratio was down 222 basis points when compared to a decline of 112 basis points for ICICI Bank, IndusInd Bank decline of 85 basis points, etc. HDFC Bank was the only large lender to see CASA ratio improve sequentially by 10 basis points. Now, funds are coming in at a higher cost to the banking sector. Federal Bank is the only lender amongst this group set to see its net interest margin improve on a sequential basis, that is quarter on quarter. HDFC Bank, IndusInd Bank and Kotak Bank, all of the three saw their net interest margin being flat sequentially. Axis Bank and ICICI Bank lost out on net interest margin sequentially by 10 basis points each. Now, pain has started to come in the banking sector. Annualized slippage ratio has increased quarter on quarter for Axis Bank, Federal Bank, ICICI Bank, IndusInd Bank. HDFC Bank and Kotak Bank saw improvement in their annualized slippage ratio on a sequential basis. So where do the valuations stack up? On a one-year forward basis, price to book value, Axis Bank valuation is lower than that of HDFC Bank, ICICI Bank and Kotak Mahindra Bank. In fact, talking about Kotak Mahindra Bank, it is the most valued bank amongst large banks with respect to valuations on a one-year forward basis, price to book value. Amongst the peers, Federal Bank's valuation is the lowest at around 1.06 times price to book value FY25 estimates. Back to you.
All right, Abhishek, thanks so much for getting us all those details from the banking sector. By the way, Bank Nifty is recovering with a great speed at the moment, so keep an eye out on that. What's also recovering is one stock in focus. For all the wrong reasons, it was knocked down yesterday. Z stock is gaining and about 7% today after a sharp knockdown yesterday because of the merger being called off. Now, most of the brokerages had, remember, given a target of around 190 rupees per share. So therefore, probably the market recovery is giving it that headroom for recovery at the moment and about 170 odd rupees per share. Now to the fresh news development on this particular company. Now, Z promoter Subhash Chandra, after the fall of Sony deal, lashes out at the market regulator SEBI in a letter to Finance Minister Nirmala Sitharaman. In fact, Chandra questions the timing and the urgency of the SEBI investigation coinciding with a critical juncture of the Z-Sony merger, especially when it's a matter that's already on the company's records. Now, more importantly, Subhash Chandra seeks the Finance Minister's intervention to safeguard the interest of the minority shareholders of Z, who remember have suffered a blow due to the termination of the merger by Sony. He also says that in the letter that SEBI is acting with predetermined mind, and to support his argument also quotes an excerpt from the SAT or Securities Appellate Tribunal order in a case, remember, SEBI versus Puneet Goenka, which, remember, overturned SEBI's interim order on removing Goenka from key managerial position. So SAT, in a scathing remark, had called it a manifest error on the part of the regulator to pass the order based on assumptions, and that has been cited by the Z promoter. Subhash Chandra, seeking intervention by the Finance Minister, also highlighted that India has lost the FDI inflows worth $1.5 billion due to the Z-Sony merger falling through. So that's the fresh development in a merger which has failed. Pavitra.
All right, Nisha, thanks a lot for getting us all of those latest details on Z. But with that, let's also shift focus and talk about a story which is really top of mind. And this is on the enhanced disclosure norms that will come into effect for high-risk FPIs starting from the 1st of Feb. So Yash is here with more details. Yash, first of all, take us through what these new norms entail, and then what could really be the impact of these regulations on the Indian market?
Well, as far as, SEBI's requirement on seeking the mandate to secure high disclosures from these high-risk FPIs are concerned, the timeline for that ends on February 1st. Now, let's come to the point of what are these enhanced disclosures. essentially granular details on ownership of economic interest in and control of these foreign investments. The details will help SEBI, reach out to the ultimate beneficial ownership of these foreign portfolio investors. These high-risk FPIs had time between November 2023 to Jan 2023 to submit these enhanced granular disclosure with market regulator SEBI. Now, which FPIs come under the category of high-risk FPIs? SEBI has made a very objective selection of certain foreign portfolio investors which qualify to be under this particular category. The identification was done on the basis of two important criteria points. First one would be FPIs which have 50% of their total India assets under management in one single corporate group. The second set of FPIs identified would be the ones which have about 25,000 crore rupees of assets under management in Indian equity market. Now, what is the AUM share from these high-risk FPIs? In its consultation paper, market regulator SEBI estimated high-risk FPI AUM to be around 2.6 lakh crore rupees as on March 31st, 2023, which would be around 6% of the total FPI AUM and 1% of the Indian market capitalization on that particular basis. Now, since then, the base has of course increased. FPIs certainly have gone up, but sources suggest that FPIs which may be required to provide enhanced disclosures are expected to be significantly less than what was estimated at the time of SEBI's consultation paper or even the board note. Now let's come to the important point. Why enhanced disclosures from high-risk FPIs? Now, some FPIs have been observed to have concentrated a substantial portion of their equity portfolio in single company, and in some cases, these concentrated holdings have also been, near a stagnant point maintained for a very long time. This could be done to circumvent regulatory requirement such as that of maintaining minimum public shareholding. Further, having granular details on ultimate beneficial ownership for various high-risk FPIs also protects against the risk of opportunistic takeovers and acquisitions of Indian companies. Now let's come to the timeline as far as the implementation is concerned. SEBI had first floated this consultation paper on enhanced disclosures from high-risk FPIs in May 2023, which finally got approved by the Board of Market Regulator in June 2023. SEBI had given time till January 31st to these identified high-risk FPIs to disclose granular details on their ultimate beneficial ownership. Now, if these identified FPIs are not able to disclose the required details by January 31st, then there is a grace period of another 10 days, which will be till February 10th to make those needed disclosures. Even after February 10th, there is no immediate deadline or a cliff for these high-risk FPIs, as they would have another 6 months starting February 10th to liquidate or rebalance their holding to comply and move out of that high-risk category. Now let's come to the final part of this particular story, which essentially are the exemptions and which are the FPIs who, despite falling under the high-risk category, will be exempted from furnishing these enhanced disclosures. Government and government-related entities like central banks, sovereign wealth funds, pension funds, public retail funds, also FPIs having a broad-based pool structure with a widespread investor base. Also, along with that, ETFs with less than 50% exposure to the India and India-related equities will be exempted. Also, FPIs whose holdings in Indian corporate is below 25% of their overall global AUM at a scheme level, and FPIs whose equity AUM is below 50% of the overall global AUM, again at a scheme level, will be exempted. Finally, FPIs which are unable to liquidate their excess investments due to restrictions like IPO lock-ins and moratoriums and so on, and newly registered FPIs after first 90 days from the date of settlement of their first trade in India will also be exempted from furnishing these enhanced disclosures with SEBI.
All right, Yash, thanks so much for getting us all the details on the enhanced disclosures required by a regulator from the certain pocket of foreign portfolio investors in India. Let's also hear out what Sameer Arora, the founder and fund manager at Helios Capital, had to say on this particular aspect of disclosures.
If you have more than 3 billion, who will have? Maybe a few funds will also have, but mostly it will be the P-note guys, because they are aggregating for thousands of underlying investors. Now, there are rules for those guys, but to say each of them who has bought a P-note should disclose his ultimate beneficial owners because he bought 5 million of a P-note, that I think many people may choose to say yes or no. We means we anyway don't have 3 billion, but India-centric guys can't escape, so they have to do whatever is asked. But others may say, it's too small, but these small things aggregate over time or over different players, and it becomes, and sort of an overhang.
All right, important comments coming in there on an important aspect. As we slip into a short breather on Business Lunch, remember, Money Control has beaten the Economic Times, making it the clear digital leader in business, markets and finance news in India. It has surpassed ET in major rating categories according to the latest viewership data from ComScore, which measures digital readership. Now, Money Control dislodges ET as number 1 in terms of unique visitors. It is double in terms of page views to ET and also showing far greater stickiness. Money Control is also more than 4 times of ET in terms of time spent, showing much greater engagement.
Welcome back. You're still tuned into Business Lunch. For the market, we're seeing an 85-point gain right now. So it's holding on very well to, the gains that we saw after that dip that came through. What's doing well? You have a lot of the PSU stocks, the metals doing very well as well. And the PSU bank index has moved up quite well as well. So while you have a lot of the private banks which are under pressure, the PSU banks are doing quite well. By the way, those are Excites numbers on your screen. The EBITDA is up 10%, so it's coming at 440 crores. Let me see if I can get some more numbers. The margin is pretty steady, so it's at 11.5%. What we had last year was around 11.7%. The stock is, it has moved back into the green right now. Net profit up 7.5%. No big kind of moves coming through in Excite right now. Revenues up around 12.6%. So that's come in at around 3,800 crores. What we had last year was around 3,400 crores. So that is Excite's numbers. I just want to point out the overall banking index as well has recovered from the lows. So right now, if you take a look at the Nifty Bank, it is down 140 points, but it's down just 0.3%. And there's definitely been a bit of a recovery. There you have it on your screen, that you can see even some of the banks which were suffering quite a big hit earlier in the day, they are coming off the lows quite well. So whether it's Axis, whether it's ICICI Bank, Kotak Mahindra Bank also quite sharply off the lows right now. The other stocks which are seeing red today, they include some from the IT space, so names like TCS under pressure, and then you have a lot of the auto companies, so names like Hero, Eicher, these are all correcting after what has been quite a good run for the companies. But let's move on to an exclusive now. This is an important story, and sources are telling CNBC-TV18 that the government may consider a higher subsidy for solar rooftops. Sapna has been tracking this and joins us with more on this. Sapna, what are you picking up?
Yeah, so these are all discussions and, probable proposals from various government stakeholders at the moment. So nothing has been decided that we carry it. However, having said that, so far the discussions that have unfolded probably indicate towards, once again a markup in the subsidies given for rooftop solar. This, of course, is also in the context of the big announcement made by the Prime Minister. He has set a target of 1 crore houses having, rooftop solar. Of course, no deadline has been given on that, but we are given to understand that probably over the next 12 to 18 months is what will have to be achieved. And consequently, to incentivize the lower level, the lower income brackets, probably the middle class and, below that. So the subsidy arrangement, there could be some rejig in the rates, basically, and, higher subsidy allocation. For instance, 1 to 3 kilowatts, the subsidy could be increased from the current 40% to 60-odd%. Similarly, 2 to 5 kilowatt, this could be again at around 40-odd%. If you look at the current grid, the current structure, it's basically up to 3 kilowatts, 40% is the subsidy rate. And from 3 to 10 kilowatts, it's around 20-odd%. So, this is like, say, a very loose parallel would be like the income tax slabs getting rejigged, within that, additional space is created. So something like that is on the cards. But as I just said, we have to wait and watch for the approvals. How is it going to move? Like, will there be a cabinet process required? Post that, maybe something in the budget, if not interim, maybe the July budget. But this is the direction in which it's going to move. And as of now, the proposals which are under discussion, they point towards a substantial allocation in terms of a higher subsidy amount for rooftop solar, somewhere around 40,000 crores are the back of the envelope calculations. But as I just said, we have to wait and watch how these numbers pan out. But this going forward, this could be a big ticket subsidy program to incentivize solar energy setup in the country.
All right, Sapna, an important piece of information there, and it has been an industry's ask, quite a leg up for the industry in terms of the thrust towards clean energy. But in the meantime, keep an eye out on Kolte Patil. The results are declared right now. Substantial drop in the revenues on a YOY basis, and even losses have expanded for that counter. With that, slip into a short breather on the show. When we return, we will get you the latest coming in on the war in West Asia. Stay tuned. Welcome back. Let's focus on West Asia, where Israel and Hamas are still at war amid efforts to employ a 30-day ceasefire. Qatar, who has been brokering the ceasefire, says that there is a lot to be optimistic about with regards to the ceasefire. However, they have expressed concerns over the fluid nature on ground. Meanwhile, UN Secretary General has also said that Israel's occupation must end, and this comes after they refused a two-state resolution for the conflict. As things stand, the situation remains tense in the region. However, there are early signs of a 30-day ceasefire amid the consistent efforts from Egypt, Qatar, and also the US.
All right, those are the latest developments. But with that, we have to wind down on this edition of Business Lunch. From Nisha, me, and the entire team, thank you very much for tuning in. We have Mid Cap Radar up next.